Welcome back to Investing Talk Podcast.
Today we're looking at MP Materials. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. And wow, what an analysis this is. I mean, we are looking at a company that's really undergoing a radical transformation.
Right.
Moving from basically a commodity play to, well, a vertically integrated strategic powerhouse. It's quite the shift.
Okay. Let's definitely unpack that transformation because the story here, it seems built on some really powerful momentum. Just looking at the chart, the stock advanced nearly 47% just from July through October 2025. I mean, that kind of it's not just wishful thinking, right? It's got to be built on something solid.
Oh, absolutely. It's built on concrete strategic catalysts and probably the most tangible one, massive government backing. We're talking about a multi-billion-dollar public-private partnership.
Aimed at securing the domestic rare earth supply chain, which everyone's talking about.
Exactly.
And this is where it gets really interesting for investors, I think. We're not just talking about grants or, standard loans here.
No, not at all. The U.S. Department of Defense, the DoD, they made a pretty significant move, a $400 million preferred equity purchase.
Preferred equity. Okay, so what does that actually signal? Because it instantly made the government the company's largest shareholder, right?
Precisely. And that signal, it's everything.
Yeah.
When the DoD uses preferred equity, it's not just financing. They're indicating real long-term confidence, a deep vested interest in the company actually succeeding.
So it basically says this is a critical national asset.
Absolutely. It classifies them that way,
Yeah.
which dramatically shifts the risk profile for regular private investors looking at the company.
And that strategic alliance, it seemed to directly lead to the company's big pivot back in September.
It did. They essentially ceased all sales of their rare earth concentrate to China, just stopped, and pivoted, dedicating their output exclusively toward U.S. defense and tech industries. That move, it cemented that critical domestic asset status we were just talking about.
That pivot sounds potentially costly in the short term, though, cutting off a major customer like that.
Oh, it is costly short term, no doubt, but strategically, probably invaluable long term. It guarantees their place, in that domestic supply chain for key U.S. tech. And we're already seeing the impact, the commercial validation.
Right, exactly. It's not just government policy driving this. You've got blue chip validation picking up steam, Apple's $500 million U.S. supply chain commitment, specifically focused on rare earth magnets. That really strengthens the long-term revenue picture, doesn't it? Takes it beyond just policy hope.
It really does. It shows real commercial demand. And, well, analysts have certainly noticed this whole transition. Institutions like CFRA, they've upgraded their price target. $44, I think, as of October.
$44, yeah. The market seems to be recognizing this isn't just like a mining company anymore.
Not at all. It's a strategic integrated manufacturer, right at the intersection of defense and, well, future tech.
Okay, so that's the strategic narrative. It's compelling, no question. But for you, the investor listening, the core question is still, do the financials actually back this up? We need to look under the hood, right, at the money line.
We absolutely do. And if we connect this to the bigger picture, the growth profile, strong. It's undeniable, really. Q2 2025 revenue was about $57.4 million.
Yeah, up 84% year over year. That's significant growth.
Huge jump. And maybe more importantly, look at the operational scaling. That neodymium, praseodymium, NdPr output.
NdPr, right. That's the key stuff.
That's the key stuff. It hit a record 597 metric tons, up 119% year over year. They are seriously ramping up output of the valuable material.
Let's pause on NdPr for just a sec, because you hear that term thrown around a lot. Why is that specific material so critical to this whole story?
Right. Okay, so NdPr oxide, it's the essential ingredient, the thing you absolutely need to make high-performance permanent magnets.
The super strong magnets.
The super strong ones. Think EV motors, wind turbines, robotics, even advanced missile guidance systems. This stuff powers the whole electrification transition and, crucially, what people are calling physical AI.
Physical AI, like robots and drones, things that move.
Exactly. Technology that moves and acts in the real world. Without a reliable domestic supply of NdPr, the U.S. basically loses control over those future industries. That's the strategic piece.
Got it. Okay, so that connects the demand side. Now back to the financials. Scaling up like that, especially with complex processing, that usually costs a fortune up front.
It absolutely does. And we have to be clear about the financial trade-offs here. The gross margin trailing 12 months is pretty thin, 11.29%.
Okay.
And the net profit margin is, well, significantly negative, minus 41.87%.
Ouch. Okay, that sounds bad on the surface.
It does. But here's the critical context. This negative profit isn't like a sign of failure. It is the cost of that transformation we talked about. It reflects the heavy, necessary investment in building and commissioning those new high-margin downstream facilities.
Yeah.
The ones that aren't even generating revenue yet.
Okay, so investors are essentially funding a big construction project right now, betting on future high-margin production coming online soon.
That's the bet, yes.
Which implies they're burning through cash. So
Right.
How leveraged is the balance sheet? Is there a lot of debt?
The debt-to-equity ratio is high, 92.7%. And on its face, yeah, that might seem worrying.
Definitely raises an eyebrow.
But context is key again. That high debt level is arguably strategically manageable because of the nature of that $400 million DoD investment.
Okay, walk us through that. Why is the DoD capital so strategic when the debt looks high?
The magic word is non-dilutive. That preferred equity allows them to finance this massive, capital-intensive scaling up capacity, building these complex plants without punishing existing shareholders.
So they didn't have to just flood the market with new shares to raise the money.
Exactly. They avoid severely diluting ownership stakes while still getting the financing runway they need to finish this transition, all backed by the U.S. government. That's a major strategic win you don't often see.
Okay, so they've got the financing, they've got the focus on the critical NdPr material, but the real edge here, you mentioned integration, that structural competitive moat they've built.
That's where the unique value really lies, I think. MP Materials is the largest and, crucially, the only fully integrated rare earth supplier in North America. Full stop.
Only one.
They control the whole chain, from the mine itself, Mountain Pass, all the way to the final separated rare earth oxides.
So what does fully integrated actually mean in practice compared to, say, other miners?
It means they don't just, dig up the rock and sell the basic concentrate, which historically is mostly what they did, selling it to China for the hard part, the processing. Vertical integration means they're building the capacity for the complex separation and refining of that NdPr oxide themselves here in the U.S. This process is chemically intense, super technical, needs massive energy.
Sounds expensive and difficult.
It is. And by mastering this complex separation domestically, they create that structural supply advantage. And they capture exponentially higher margins than just being a miner. Way higher.
That scale sounds huge. What are the forward targets? What's management actually guiding for?
The guidance is aggressive. They plan to expand annual refined NdPr oxide capacity to 9,000 tons. That's the high-value stuff.
All right.
And at the same time, total concentrate production is scaling up towards 60,000 tons. If they hit these marks, they will absolutely cement their position as the leading integrated supplier outside China, no question.
Execution, then. That seems to be the absolute key. The hinge this whole thing swings on. Let's shift focus to the immediate milestones, the things that turn that $400 million DoD check and these big plans into actual high-margin revenue. What are the short-term operational catalysts investors need to watch like a hawk right now?
Okay, the single biggest near-term driver, without a doubt, is the commissioning of the Independence Magnetics facility down in Fort Worth, Texas.
The magnet plant.
The magnet plant. This is the final piece of the puzzle, the last step in their vertical integration plan. This launch is expected late Q4 2025, so very soon.
And why is that facility so critical?
Because it unlocks those ultra-high margin downstream revenues. It means turning the separated NdPr oxide they make into actual finished high-performance magnets, the kind needed for EVs and defense applications.
So that's where the DoD and Apple deals really start hitting the profit line.
Exactly. That facility coming online successfully, that's the moment the financial picture is really expected to inflect, to potentially go from that negative net profit we talked about towards positive territory. It's huge.
So the Independence ramp in Fort Worth is like the physical proof of the strategy working, linking the big partnerships directly to profit. Okay. Outside of that big operational milestone, are there hard calendar dates coming up, things that could cause some volatility?
There are. We've got the Q3 earnings release confirmed for November 7th, 2025, so just around the corner.
What are investors looking for there?
Two main things, I think. First, clear updates on the timeline and progress of that Independence facility ramp. Is it on track? Any hiccups? Second, the first significant revenue recognition from those new government and commercial contracts. People want to see the money starting to flow.
Makes sense. What else?
Then later in November, you've got major index rebalancing events scheduled, notably the Russell 2000. These events, they can force institutional funds to buy the stock as they adjust their holdings.
Right, the index inclusion effect can cause pop.
It can trigger significant price volatility, yeah, and increase the institutional ownership base over time.
And the technicals. Does the chart suggest institutions are already getting involved?
It really seems like they are. The technical picture lines up almost perfectly with that bullish story. The stock's trading consistently above both its 50-day and 200-day moving averages. That confirms a pretty robust bullish base.
Solid uptrend.
Yep. And momentum indicators, things like the RSI and Mankey-D, they suggest there's still potentially room for more upside. It doesn't look wildly overbought right now, which implies maybe more patient accumulation, not just panic buying.
Okay. Now, since we are talking investing, we have to at least touch on the speculation, the rumors swirling around, recognizing, of course, these are unconfirmed, just chatter.
Right. Got to take these with a grain of salt. But what's floating around includes talk of a potential massive new EV OEM partnership.
Another big automaker, maybe.
Whispers of active negotiations with maybe one of the top 3 U.S. electric vehicle makers for a multi-year, high-volume magnet supply deal.
Wow. Okay. That would be huge for diversification. Getting beyond just Apple and the government contracts would really stabilize that long-term commercial revenue stream.
Absolutely. Then there's also speculation about a potential index upgrade, maybe moving from the Russell 2000 up into the S&P 400 mid-cap index.
Oh, okay. That's a bigger deal.
Much bigger. That kind of promotion creates automatic, non-negotiable buying demand from all the big passive index funds. Huge inflow potential.
And anything else.
And just given how well the DoD relationship seems to be going, there are also rumors. Again, just rumors of additional significant international defense contracts, potentially with NATO allies who are also looking to secure their own rare earth supply chains outside of China.
Okay, lots of potential upside catalysts there, confirmed and rumored. But look, a balanced view is critical. Many critics might argue this is mainly a geopolitically driven story, maybe not a proven sustainable business model yet. What are the key risk factors? What could actually derail this bullish picture?
Yeah, and this brings us to probably the single most important question. Can they actually execute this massive operational transition successfully? Execution risk is paramount here.
Building these complex plants on time and on budget.
Exactly. Building and ramping up these incredibly capital-intensive new facilities. It's inherently difficult, full of potential challenges. We aren't talking about, assembling phones here. This is complex chemical processing.
High tolerances, specialized materials.
High tolerances for rare earth separation, dealing with specialized talent, environmental hurdles. If there are significant delays in getting that Fort Worth plant certified and running efficiently, or if costs keep ballooning, that pushes the profitability timeline further out, and the stock could get punished.
So it's not just building it, it's getting the output certified for defense clients, for high-tech companies like Apple. They have zero tolerance for quality issues, right?
Precisely. The standards are incredibly high. Second big risk area, customer concentration. We mentioned the big deals, DoD, Apple, GM. That's great validation, but their current dependence on just a few massive strategic agreements is structurally a risk.
If one pulls back.
If there's disruption to any single major contract, it can materially whack their forward revenue forecasts, especially right now, before that Independence facility really diversifies their product offering and customer base.
Okay. And they are still, at the end of the day, producing materials. They can't totally escape market volatility, can they?
That's right. Commodity volatility is always a background factor. Rare earth prices, historically, they bounce around a lot. They can be unstable. Now, those government price floors and the long-term, often fixed-price contracts, they do help mitigate some of the really severe downside risk. But price fluctuations can still definitely pressure margins month to month or quarter to quarter, especially in these early stages before they're fully humming.
And finally, what about the big picture, the geopolitical risk that kind of kicked this whole thing off?
Yeah, the entire story benefits from what you might call the onshoring premium, right? The higher valuation the market gives to U.S.-based critical supply chain companies just because they exist outside of Chinese control.
Right, the de-risking value.
Exactly. So logically, any major sustained easing of U.S.-China trade tensions, if things suddenly got significantly better, that could potentially reduce the urgency, reduce the political support for reshoring these critical supply chains. That risk while maybe low probability right now, it's always kind of lurking in the background.
Though current policy seems pretty dug in on supply chain independence for critical materials.
It certainly does, very much so.
Okay. So let's try to synthesize all of this. We've got explosive revenue growth, that strategic, non-dilutive DoD money, big commercial validation from Apple and others, bullish technicals, but weighed against pretty serious execution risk, customer concentration issues. What's the overall thesis then for you, the investor listening right now?
I think the overall strong bullish rating, that 9 out of 10, it still holds. It feels firmly positioned there. The company definitely offers that long-term structural leadership in these high-growth areas, rare earths, physical AI, and it's benefiting from a powerful geopolitical tailwind. But the most compelling factor right now, I think, is the immediate term stuff. That commercial ramp-up, specifically the Fort Worth magnetics facility coming online, and the expected material inflection point and profitability that should follow.
So the next few quarters are critical.
Absolutely. Successfully executing that operational step-up, that creates a highly attractive risk-reward profile, specifically looking out through, say, Q1 2026. That's really the time frame listeners should probably watch most closely for those key earnings beats and operational surprises that could re-rate the stock.
Focusing on that Fort Worth ramp will be key to unlocking the true value of their vertical integration.